Round two.
Woo! Okay. Hey, everybody. We're back. I have Carl with Envoy Mortgage. My name is Amanda. I'm with the Davis team, and today's topic is interest rates.
Hey guys, this is Carl with Envoy Mortgage. Glad to be back for episode two.
Awesome. So, yeah, today we're going to be discussing interest rates. So, tell me, Carl, why are interest rates such a hot button topic right now?
Yeah, so it's obviously that and purchase price are the two things that everybody thinks about when it comes to buying a home. The two things that we're kind of trained to want to think about, and it is an important measure of buying a home. It affects your monthly payment and your home buying power and how much you pay and interest and all those great things over it.
So, what things affect your interest rate as a buyer?
Yeah, so the interest rates, I mean, there's a lot of criteria that go into determining your exact interest rate. I guess probably some of the most common things would be, the property type. That's going to be a big one, right? Is it your primary residence? Is it a rental property? The loan amount, right? Interest rates fluctuate with loan size from time to time. The what loan program you're going with, FHA or VA or conventional or jumbo or whatever it may be. Rates vary from program to program. The amount of equity or down payment influences rate. Your debt to income ratio can influence the rate, and obviously your credit score can be a driver for the interest rate. There's some other criteria too, but those are kind of the main ones that have the biggest impact on the interest rate that you'd be eligible for.
And so, when you're talking with buyers right now, kind of what are their concerns when you talk about interest rates?
Yeah, I mean, I hear a lot of people say, "Hey, when are rates going to go down?" Which I wish I had a crystal ball to tell you, but nobody does. We've been seeing them trim down the last couple weeks for sure. Looks like we're going to continue to head that way, but they're incremental changes while we're at it. I think part of that is just the psychology of, we're just a few years removed from historically low rates. I mean, so they're obviously rates are higher than what they were, but we're not in an ultra high rate environment at the time, if you're looking at the history of 30-year mortgages.
And when you talk about rates are higher than they have been, I do think that actually historically they're not, right? The historical average is what, like 6.5%. So they're really not that much higher than they have been in the past.
Yeah, no, they're not. We just went to really low rates really fast, and then they rebounded and shot up really fast, right? So we've seen rates in this environment for plenty of history, right? We just never saw 2.5% or two and three quarter, sub three, or even 3% interest rates before. So we went from, extremely low rates to literally like a climb for rates coming up. So there was the shock factor there
Hmm.
for sure.
How do folks get the best rate?
Buying a primary residence is obviously always going to give you a little more favorable rate than a non-owner occupied home. Having good financial reserves, having the larger the down payment typically tends to help a little bit. And then obviously, having as high of credit score as possible. So those are kind of the measures of risk if you're thinking about it from a bank. A bank is assuming risk by lending somebody money. So the more risk there is, the higher the rate or the more expensive the rate's going to become. So as a buyer, the more of that risk you remove from a lender, the more favorable your rate will become, right? So greater amount of equity that you have equates to lower risk.
Hmm.
Higher credit score is lower risk. More financial reserves are lower risk, right? And primary residences. Um, I don't necessarily know that those are per se like higher or lower risks compared to second homes or investment properties. There's pricing adjustments that are in place that make primary residences more favorable.
So, what I'm hearing you say is try and get the best credit score you can get, maybe a 700 or above. Try and save some money to help with a more down payment and lowering your debt to income ratio. Those things will really help with getting the best rate when you're
Yep.
ready to buy.
Yeah, absolutely.
Fantastic.
Absolutely.
Last question. Should you wait for rates to drop?
I think now is always the best time to buy. I mean, I don't know for certain if rates are going to continue to go down or if they're going to come up. Probably both, right? I mean, I
Mhm.
change is pretty much the only constant, right? So I think, over time you'll always see rates come down. You'll always see rates go up, right? There's going to be some level of that. I mean, the advantage of obviously buying now is you get to start building equity in your home, whether that's through market appreciation or amortizing your loan. All the other perks, the financial perks that come with a home ownership, and if I'm, if you're right and rates do come down, right? I mean, there's always an opportunity to refinance to improve the payment and improve the rate. Now is always the best time to buy.
Absolutely. And it's a great
Yeah.
market right now for buyers with homes sitting on the market. We're able to negotiate lower sales price and seller concessions to help with their closing costs, things like that. So I do think that I'm with you. Don't wait. Do it now and then refinance later.
Everybody focuses on purchase price and interest rate, but if we change our psychology and we just look at how much money do I have to contribute and what is my monthly payment, and like you said, we can use the opportunity for seller concessions to
Mhm.
drive down rates or do temporary buy downs. There's a lot of low down payment options available that allow you to get into a home now and start taking advantage of that. And then whether it's a temporary subsidy on your payment or a permanent buy down on your payment, right? Ultimately, if we're focusing on money out of pocket and monthly payment instead of what are the purchase prices and what are the interest rates, we can customize solutions to fit.
Absolutely. And I think that, you know, life doesn't always wait for the interest rates to drop. So if you need to downsize, if you need more space, if you need less maintenance, like do it now and take advantage of the good buyer's market that we have here in DFW.
Absolutely.
All right, Carl, this was super helpful. Thank you so much for joining us this week. And you brought up loan costs. So that's going to be our topic next week, talking about the cost of buying a house. So we'll deep dive into that next. And before you go, don't forget to like this video, subscribe to our channel, and hit the bell icon so you never miss an update. Follow us on Facebook, Instagram, and TikTok for more real estate tips, listings, and our favorite things to do in DFW.
Thanks for having
Bye.
me. See
Thanks,
you guys next
Carl.
week.